Assalamu alaikum. If you're a Muslim investor, you've probably felt this tension, right? How do you grow your wealth, really build for the future, without compromising your faith? It can honestly feel like you have to pick one or the other. But here's the thing. What if you don't? What if it's not a choice you have to make? Let's get into it.
Think about this for a second. It might actually shock you. The vast majority of stocks out there, the big names you hear about all the time, they're probably not halal. Why? Well, it's because so many of them are tangled up in riba, interest, or they're in businesses that are just off limits for us. Our whole modern financial system is pretty much built on interest, which is just fundamentally against our principles. And that means, without even realizing it, your hard-earned money could be invested in ways that go against your values.
But, and this is the really important part, here is the good news. It is absolutely possible to grow your wealth through investing and stay 100% true to your deen. You do not have to make that choice. You can have both. And that's exactly what we're going to walk through today. I'm going to show you how.
Okay, so where do we even start? What makes an investment halal versus, not halal? It really all comes down to three basic foundational rules. Think of them as the three main checkpoints every single investment has to pass.
All right, here are the big three, the three pillars of halal investing. Number one, absolutely no riba, which means no interest. We'll get into that. Number two, no unethical businesses. Simple enough, right? And number three, we have to avoid companies with way too much debt. That introduces something called gharar, which is like excessive risk or uncertainty, basically gambling. And that's a no-go in Islamic finance. Let's break each one down. First up, and this is maybe the most important one, riba. Riba is, simply put, any kind of interest. And there's a really clear black and white rule for this. If a company makes more than 5% of its money from interest, it's considered haram, full stop. This one rule immediately knocks out almost all conventional banks and insurance companies because their entire business model is literally built on riba. All right, the second checkpoint is much more intuitive. It's all about what the company actually does. We just can't invest in industries that are clearly forbidden, right? So we're talking about alcohol, pork, gambling, pornography, tobacco, even certain types of weapons. The main thing here is making sure the company's core business is clean and ethical from an Islamic perspective.
And this number right here, 33%. This is our third big rule. It's the magic number for debt. A company is only considered halal if its debt is less than 33% of its total value. Now, why is that? Well, it goes back to that idea of gharar, excessive uncertainty. A company that's drowning in debt is just too risky. It's unstable. Investing in it feels a lot more like a gamble than a solid, sound investment. And that's just not how we're supposed to build wealth in a halal way.
Okay, so that's the theory. We've got the rules down. But knowing the rules is one thing. How do you actually use them? How do you find these stocks and then, buy them? The great news is technology has made this 1,000 times easier than it was back in the day.
Look, you don't have to become a financial analyst overnight reading through endless reports. There are awesome tools that do all the heavy lifting for you. Apps like Zoya and Islamically are game changers. You literally just type in a stock symbol and bam, it tells you if it's halal or not. Zoya is fantastic, especially for US stocks, and they even have a free version to get you started. Islamically is great if you're looking at global stocks. And, this is a big deal, they're certified by an actual Sharia board, so you get that extra peace of mind.
So, you've found a halal stock. Awesome. Now where do you buy it? Not all brokers are the same, and this is really important. If you want something super simple and automated, check out Wahad Invest. They're perfect for beginners because they just build a halal portfolio for you. But if you're someone who wants to pick and choose your own individual stocks, then a broker like Amana Capital is a fantastic choice. Their accounts are built from the ground up to be completely riba-free.
All right, you've got your screener, you've got your broker. Now for the fun part. What do you actually invest in? Broadly speaking, you've got two main paths to go down. You can go with ETFs, those are exchange-traded funds, or you can pick individual stocks. Let's look at the pros and cons of each.
This chart really breaks it down nicely. Think of halal ETFs as the set-it-and-forget-it approach. You buy one thing, and you're instantly diversified across tons of different halal companies. This automatically lowers your risk, and they're already certified as halal for you. It's a fantastic starting point for beginners. Now, picking individual stocks, that's the more hands-on approach. You get way more control, and yeah, the potential for higher reward is there. But it also comes with higher risk. And the big one, you are responsible for screening every single stock yourself.
So if ETFs sound like your speed, here are a few of the big ones to know about. SBUS and HALAL are both really popular. They basically track the biggest halal companies in the US market, so you're getting exposure to those household names. If you want to go global and invest outside the US, something like IUSDU is a great option. And take a look at the expense ratios. That's just the small yearly fee you pay to own the fund. They're pretty low, which is exactly what you want to see.
Okay, we've talked a lot about what to do, but it's just as important to talk about what not to do. Seriously, even if you have the best intentions, it's pretty easy to slip up and make a mistake that could mess with your investments and your faith. So let's quickly go over the 5 most common mistakes people make.
You really have to stay on top of things. So, number 1, don't just screen a stock once. A company's status can change, so check it regularly. 2, just stay away from banks and insurance companies altogether. It's not worth the headache. 3, make absolutely sure your broker is halal. 4, avoid day trading. That's just speculation. It's not investing. And finally, number 5, and this is really key, sometimes a halal company might earn a tiny bit of haram income by accident. If that happens, you have to purify it by donating that small amount to charity. That keeps your investment clean.
And really, if you take away just one thing today, let it be this. The stock market isn't haram. It's just a tool. Like any tool, it can be used for good or for bad. What makes the difference is how you use it. It's about your intention, your knowledge, and your discipline. If you stick to the principles we've talked about, you can turn the market into an incredible, powerful tool for building halal wealth for you and your family.
So as we close out, I want you to think about this. What's your first step going to be? Now you have the rules, you have the tools. What's that first halal investment going to look like for you? Is it going to be a simple, diversified ETF, or are you ready to research that one company you've had your eye on? Remember, the whole journey just starts with that one first step. Barakallahu fikum.